Hi everyone, this is Paul Stewart here from Elite Wealth Property Consulting. Just wanted to introduce us and explain a little bit about what we do. We are in the business of helping wealthy investors get property investments in the UK that are tax exempt. We're about the tax wrapper around the property when not property sources. So without further ado, I'm going to go through an explanation of why you need to talk to us and what it is we do and where we fit in the marketplace. And we've got a website, and obviously we've got my email address there as well. So here we go. First of all, if you're an offshore resident and you're buying UK property, there are issues. There are taxes to pay, but there are exemptions, and what we want to do is to work alongside your property sources or your financial advisors or directly with yourselves to be able to allow you to make use of these exemptions, which are very valuable. So if you live in an environment where you're not used to paying tax, you're an offshore individual, HMRC is the tax authority in the UK, and they'll be wanting 20% tax on a great deal of things. So if you have, for example, residential property that you're investing in the UK, you'll be deemed to be a non-resident landlord, and there'll be 20% tax to pay on the gross rent. Even if you try and get around things by offering loans into a UK company from your money, then the interest that you charge, there'll be a 20% withholding tax on the interest, so you can't artificially reduce your profits that way either. There's also capital gains tax, CGT, when property is sold, and again, you can't work around that. There's also a thing called annual tax on enveloped dwellings, and these are properties that are held within limited companies that people are very often advised to use. So property in the UK is one of the areas where a non-taxpayer absolutely definitely will have to pay tax to the UK tax authorities. And either you register and you pay the tax, or indeed in some cases your property agent in the UK will pay it for you, or indeed your tenant will have to pay it for you. So if you don't want all that complexity and you don't want to pay those taxes, then you're in the right place to learn how to achieve that. So before we go any further, you may have spotted that Elite Wealth Property in Dubai is a new company, and I'm not just some startup. I've actually been around providing tax and business planning support for more years than I care to mention. I think I started in April 1987, and during that time I have been an examiner, writing and passing the exams for people who became chartered financial advisors. I've also worked in Switzerland in terms of wealth management. So in terms of myself and my experience, what I'm doing is bringing to Dubai another layer of support that I have been providing in the UK. And in the UK, I own and run a SAS pension provider. A SAS is a small self-administered pension scheme, and I've also provided anyone that wants it a whole plethora of free training videos, so you don't need to book and pay for training courses if you want to know about SASs. They're all at the website segmentedsolutions.co.uk. And in amongst my work that I do with pensions, I've also been involved with offshore pensions, qualifying non-UK pension schemes, and also things called GDCVs, genuinely diverse commercial vehicles. And it's really this that I want to bring to the table. It's the ability to make use of the exemptions, the SASs or the QNUPSs, using things like GDCVs to enable you to get involved with property without paying UK tax. So, before we go any further, the most important thing we need to establish is whereabouts the money's coming from. So if it's individual wealth, that's very different to money coming from a company, even if it's an offshore company. It may be that you have been in the UK in the past and you've developed pension funds through SIPs or SASs, and again, those can all be utilised, but we need to know whereabouts the money's coming from. Because if you're going to buy UK property, the structuring actually relies on asking the questions first. So my job is to sit down with yourself or your financial advisor or your property sourcer to get an idea of what's going on in the background, where the money's coming from, what you're trying to do, what you're trying to achieve. And then my job is to provide technical training and technical support to handhold you through all the different things that you may need to know. So in terms of tax-exempt structures, we've mentioned SASs, small self-administered pension schemes, and my business in the UK happily gets on with registering those and setting those up for clients. I think my world record is 5 hours from submission to HMRC through to the client being shocked that he's got his SAS. Doesn't happen every day, but it was good fun when it did. These are pension schemes set up by a company, and you can pool multiple pensions together. So if you've got a husband and wife and they've got pensions from different sources, you can bring those into one pot. And the pension scheme itself becomes a UK landlord. But it's not allowed to trade, and by that I mean it's not allowed to buy property with the intent of converting it into something else. That's a business. If it was allowed to trade, then every single property developer in the country would pay no tax at all. They would just do it inside a pension. The other issue is you're not allowed residential property inside a pension scheme, either directly or indirectly. So you might need to do certain things to get around the trading and the residential property, and that's what I'm going to come on to in a minute. There are, of course, qualifying non-UK pension schemes set up in offshore jurisdictions, and if you have offshore money personally, whether that's from employment, you've built up pensions whilst you were outside of the UK, or if you've just got personal money you're receiving tax-free, QNUPs is probably a better source than putting it into a SAS. These are set up by you as an individual. It's personal money that's going in rather than company money. Residential property is allowed, however, that's with a bit of a caveat, but it's an offshore landlord, and whilst you are allowed residential property, you'll be an offshore landlord because it's an offshore pension, and it can't trade either. So both of these structures are exempt from taxes. However, there are certain downsides, and what we need to do is to look at how we can structure the investment inside one or either, or indeed both of those, to end up with a tax-exempt and favourable environment. So how do we solve these negatives? Well, we use a thing called a GDCV, which I'll explain in a moment, and the GDCV is allowed to receive funds from a SAS, it's allowed to receive funds from a QNUPs, and then once the money is inside the GDCV, it then is covered by the rules that govern the GDCV rather than the individual rules that cover the SAS or the QNUPs. And a GDCV can trade, so you can go into property development. You can buy things with the purpose of converting it to something else. Residential property is allowed. You can do your buy-to-lets, you can do your HMOs, you can do your serviced accommodation, all of those in property without having to mind your P's and Q's in terms of is it commercial, is it residential. And the GDCV is a UK landlord, so be pleased to know that there are no withholding taxes. And there are various exemptions for the envelope dwellings tax. So a GDCV inside a SAS or inside a QNUPs is pretty much the perfect property structure. But the question is, what on earth is a GDCV? So let's move on and have a little look. First of all, a GDCV stands for a genuinely diverse commercial vehicle, and that's a definition written within the statute at HMRC. It's not that a GDCV is a particular legal entity. It could be a company, it could be an individual, it could be a unit trust. It's a designation given to something that passes that test. And it's defined by HMRC in Schedule 29A of the Finance Act. So it's very specific and it's neatly laid out. It's not as if this is fancy tax avoidance. This is predefined by HMRC. And in our case, we'll be using a UK exempt unit trust. And the reason why it's called exempt is because only pension schemes are allowed to invest in it. So your SAS or your QNUPs buys units within this exempt unit trust. And it's similar to investing in a UK property fund like Legal and General. And an exempt unit trust pays no UK corporation tax. So there's no tax on profits, no tax on rent. And actually, the tax on the growth in the units is applied to the holder of the units. And the holder of the units is either a SAS or a QNUPs, and because they're both pensions, neither of them pay any tax. So all of this is exactly how it's supposed to be working, except this particular exempt unit trust that we deal with allows you to make the property investment decisions, and that's where you can run your property business. So don't forget, we need to have a conversation around the source of funds, because that does determine the best route. We talk about individual or company, or indeed previous pensions from the UK. And all of that is also underpinned whether you might have an existing portfolio in a UK company. And it is possible, with a bit of jiggery pokery, it is possible to unwind existing UK property companies and then move that across. There are costs and there are tax issues, but it is technically possible given the correct input. So there you go. That's Elite Wealth Property Consulting. We consult with wealthy individuals who are looking to invest in UK property. We work alongside your financial advisors and we work alongside your property sources. I'm based in Dubai and obviously in the UK as well. You can drop me an email, paul@elitewealthproperty.com. We've obviously got the website, elitewealthproperty.com, and I'm looking forward to actually being able to stand up and talk to people in groups as well. So various property groups have invited me along to be a speaker. Really look forward to hearing from you, and thank you very much for your patience. Forgive me for this being a really quick run through, but it's a bit like saying to a doctor, tell me about medicine. It depends upon the ailment and it depends on what your outcome needs to be. So everything needs to be bespoke. But this gives you a flavour, it gives you an indication of what we're all about. Thanks ever so much for listening, and I look forward to speaking with you soon.